We'd been offering $4 a share. We paid $4.35. That's a little less than a 10% premium to what we had been offering. Um, if you look at, the premium to where they had been trading, it was in that same type of zip code. But really, I guess I look at it back to when we first got involved, it was at 325. The 435 ultimate purchase price off the 325 is I think a pretty significant value uplift. I think if you look at gas prices, of course, went up even more meaningfully over that period. And so if you look at it somewhere in between, call it the 375 to $4 range, you get to that ultimate type premium. That said, I think it's really apples and oranges because what PHX and Chad and they were very, they very much talked about this publicly. What they struggled with was scale and liquidity in their stock. And so the challenge for them was they had a significant amount of G&A, $10.3 million of cash G&A, $12 million plus including stock. We, of course, didn't need almost entirely all of that. We have a great team that we're excited to welcome in Oklahoma City, but the executive portion of that wasn't really necessary. So the public investors, when they look at their investment, had to very much include the 10 plus million of cash G&A. We, of course, don't have to include the vast majority of that $10 million of cash G&A. So I think you're looking at an apples and orange value proposition. From a public investor, what I would say is, okay, I have to look at the cash flow stream of these assets less the G&A. And that's not a great value proposition. On the other hand, we get to look at it as the cash flow streams over the life of the asset without the G&A. And so that's a super attractive value proposition.